Hi, I'm JR. This is the most essential issue. What is the most essential issue influencing your financial future? Your past, whatever you may have ever had, done, or thought. Your present, whatever you already may have, already may be doing, or already may perceive to ever be possible. Or our future, whatever actually happens, including whatever people like you actually will do. Which one of these is the most essential as far as your financial future is concerned? The past, the present, or the future? What's happening now is that there is a huge gap forming between those who focus on the past of what may have happened and those who focus on the future of what is going to be happening. Because the present soon passes, even what you may have been calling the present is actually shifting already into the past. Oddly enough, one interesting thing that you may have never noticed before is that the future includes both the present and the past as well. In the future, whatever is already past will still be past, right? In fact, in the future, what you recently may have already been calling present, like right now, will still have already been present as the past too. But something new is possible now as what we call our future. In the future, we could have a new experience on the past. The same old past, but a new experience, a new perspective of it. That may have even happened for you already. Learning. A new perspective on the same old past that I've already had. In the future, the recent past may seem much simpler than it has been lately, even much clearer. Let's consider now the point of all this isn't so much the general thing about future and present and past. It's about financial future, right? I already said that, but I haven't got into the detail of it. Let's consider which economic development was the most widely influential in the last 10 years. Was it a change in a certain industry? Familiar to you, maybe. Was it rising fuel prices worldwide? Was it a change in the political programs of a particular government or government agency? Now there's some pictures of a Citgo gas station, and the price is $1.49 for unleaded and $1.69 a gallon for, I think that's premium. That was a few years ago. You may know that was a few years ago. And of course, at the time, people were outraged at the high gas prices, $1.49 a gallon and $1.69 a gallon for premium. Prices were incredibly high, according to people at the time. So I assert that the worldwide increase in fuel prices in the last decade or so was the single most influential development in global economics in the last decade. After fuel prices began to rise by 1999, and there's a chart available for you to look at there, as for U.S. gasoline prices. After fuel prices began to rise worldwide by 1999, in particular we're thinking of oil, natural gas, coal, things like that. Soon, many industries and populations shifted in their practices. Then the tax revenues of many governments shifted because the industries and populations had shifted in their practices and their finances. So tax revenues of governments shifted, then political patterns shifted, and so on. So there's a chart showing, excuse me, inflation-adjusted prices of gasoline in the U.S. have gone down pretty steadily from 1918 till 1999, with a couple exceptions. But generally speaking, the chart's pretty solidly down in inflation-adjusted gas prices. But in 1999, something unusual did happen. A pretty big increase in a short amount of time. And after that 1999 to 2008 rise in gas prices, there has been a decline. And then there's been another rise, and then there's been another little decline as of late July 2011 now, as I make this. So, what will happen next? In 2004, I asked, what will the price of gasoline in US dollars be next year? And then I continued to explore my forecast, that they would be higher, and what that would mean for the economies of the US and other nations, as well as prices of things like real estate and stocks and so forth. So, for instance, let's consider on that note, which industries are most sensitive to rising fuel prices? Name, like, just what industry comes to mind as one that's really sensitive to rising fuel prices? In less than a year from 1999 to 2000, oil prices doubled in less than a year, right? And at the same time, the prices of airline stocks fell in the US by 40%. Could those two things be related? Again, what would be an industry that would be sensitive to fuel prices? Like it's a big part of their budget, or it could be a big part of their profits, or their profit margin, in the case where they have a profit, or they might not because fuel prices rise to a point where they have less profits or none at all. By 2004, I was calling the predictable future sequence of events that would arise from the ongoing rise of fuel prices by the label the domino effect. So, fuel prices were already rising by 2004. I expected them to continue to rise for the same reason they've been rising for the previous 5 years. And there were some predictable future consequences, just as there had already been consequences, like in the case of the airline industry from 1999 till 2000, with the 40% decline in stock prices in less than a year. So one of the notable things that happened was in 1999, the UK stock market, Great Britain, it peaked and dropped pretty dramatically, like many others in the world around the same time. And that was one of the predictable consequences of the predictable rise in fuel prices. It was evidence of, the UK was one of the places where gasoline was already the most expensive in the world. And as fuel prices rose even higher over the course from 1999 till 2008, fuel prices went all the way up till over $11 a gallon for diesel in the UK. Did that have any effect on the overall economy of the UK? I think any effect, yeah, we would say, yeah, it had some effect on the overall economy of the UK. And other places too, you might have noticed that. By the way, when I reference the rise in fuel prices starting in 1999 as predictable, I'm referring to the research of U.S. geologist Dr. Hubbard, first published in 1956. So the consequences of rising fuel prices were predictable in the UK and anywhere else that you had fuel prices breaking $10 a gallon for gasoline or diesel. Like Germany, for instance. And also the rise of fuel prices was predictable. Back in 1956, Dr. Hubbard detailed several simple issues of mathematics relating to the peaking of the discovery of new crude oil reserves in the U.S., which had happened, I think, in the 30s, and then also the peaking that was going on right around that time in worldwide discovery of new crude oil reserves right there in the middle of the 20th century. There's a chart there of global discovery as well as a line of the production of crude oil, or the extraction and refinement of crude oil, which actually peaked in 2006 and went down for a few years since then. Of course, there was a peak in global productivity in the late 70s into the early 80s, but then it climbed a little bit more. This time might have been the final peak in 2006. So next is a list of some of the predictable consequences of the predictable rise in fuel prices. As prices for gasoline in the UK continued rising from below $3 per gallon to all the way over $11 per gallon by 2008, the economic activity of many industries and households shifted dramatically. In the United Kingdom and in other regions with the highest prices for fuel in the world, such as Germany, patterns of spending, lending, and borrowing shifted dramatically and suddenly. Less discretionary funds were available after paying for energy, and that led to less buying of stocks and even more selling of stocks to pay for things like rising fuel prices. And all of that produced historic decline in stock prices in the UK and elsewhere. 2007 to 2009, maybe 16 months from late 2007 to early 2009, some pretty big declines in a lot of different regions of the world. There's a picture of Exxon prices. That's in the U.S. In a certain part of the U.S. I actually don't know where prices broke $5 per gallon in 2008. Not nearly as much as in the U.K. or Germany, where they were over $11 for diesel for a single gallon, but enough to impact the economic activity of many businesses in the U.S., not just airlines. So there were a few exceptions, quite a few exceptions to the economic crisis of the last decade. As fuel prices rose, who would benefit? The economies of oil-rich places like Alaska, Arabia, and Alberta, a province in Canada just north of Wyoming. They surged from the ballooning sale prices for fuels like oil. Their economies are primarily from the sale of oil, so they have a lot of oil. Their economies are really, really tied in with oil prices. So as oil prices went up 1,200% from 1999 to 2008, things were pretty good in Alaska, Arabia, Alberta, and other oil-rich places like that. What happened to other industries in those regions besides, oil itself, such as the construction industry or the computer repair industry? Naturally, with widespread economic booms bringing affluence from other places to Alaska, Arabia, Alberta, and other oil-rich places, many industries in those oil-rich regions did much better than the same industries in other places. There was more construction, more repairs of computers, more of whatever was going on in places like Alaska, Arabia, and Alberta. Just like in the 20th century, there was a lot of economic activity in the two nations that led the world in oil production in those decades, those centuries, that century, the U.S. and the USSR. A lot of growth in those two places. You may remember they rose to being superpowers in that 20th century from relative, not obscurity, but not particular prominence. Now, but back to all that economic growth, and not just the oil industry, but computer repair industry and construction industry and all these other industries in Alaska and Arabia and Alberta. What about the tax revenues of governments in those oil-rich regions, as well as the stability of politics there and political trends? Well, tax revenues in those regions surged, along with the surging economic activity, while tax revenues in much of the rest of the world declined dramatically, and so-called surprisingly. As tax revenues continued rising in those oil-rich places, political trends continued steadily, or at least with much different trends in those oil-rich regions than in the regions most dependent on importing fuels, such as the UK, Germany, Japan, Greece, Italy, and of course the US overall, where there was a lot of talk about, crisis, about budget issues, deficits, bankruptcies of insurance companies and banks and mortgage industry, big players like Fannie Mae, Freddie Mac, Countrywide, banks like Washington Mutual. So in the future, as more and more people are more and more clear about what has already been happening for quite a while, new developments will be possible. With new patterns of perception, new patterns of action can arise, even quite suddenly. Further, let's consider which economic development was the most widely influential in the last 100 years. Perhaps the answer is quite similar to the one for the last 10 years as it is for the one for the last 100 years. If one were to select exactly two regions of the planet that rose to affluence and influence during the 20th century, which ones would those be? I already gave this one away. The twin superpowers of the US and USSR rose to power in the 20th century on what fuel supply? What did they have much more of than anyone else? What did they produce much more of than anyone else? The US and the USSR, or former Soviet Union, were the number one and number two producers of oil in the world throughout the 20th century. of course, after the peaking of U.S. oil production in 1970, the U.S. quickly fell to being the number 2 producer of oil in the world, with some notable economic consequences specific to that nation in particular in the next few years. You may remember some unusual things happened in the 1970s. Foreign oil imports to the U.S. eventually exceeded domestic production in the U.S. and then soon exceeded a 2-to-1 ratio. Several years ago, it was most recently that I looked at the numbers, about 6 million barrels of oil a day produced in the U.S. and about 14 million barrels of oil per day imported. That's more than a 2-to-1 ratio of imports over domestic production. So the foreign dependency ratio still continues to increase. What kind of consequences could that have for the U.S.? Could it be similar to the kinds of things that have happened in the U.K. or Germany or Italy or Greece or Japan? Well, let's back up to the whole century-long perspective. Prior to the 20th century, neither regions of the U.S. or USSR were dominant globally, nor even especially prominent. Germany and the UK were the primary opponents in the 2 world wars of the 20th century, but with the world's 2 biggest producers of oil, the US and the USSR, both on the side of the UK, victory for the UK in World War II may have been relatively predictable. Consider that just as the US and USSR rose to distinctive prominence in the 20th century, and just as Alaska, Arabia, and Alberta are rising to new prominence already, the relative abundance of oil may continue to be a primary factor in the expanding of economic affluence, as well as the expanding of political influence. Again, in the future, as more and more people are more and more clear about what has already been happening for quite a while, certain new developments will not only be possible, but easily predictable. So your past, of whatever you may have ever had, done, or thought, is not the primary influence on your own financial future. Further, your present, of whatever you already may have, already may be doing, or already may perceive to ever be possible, is also not the primary influence on your own financial future. Finally, the future includes both what has already been in the past and what is currently present. The future includes all that. Now, the most essential influence on your future is our future, the future of all of humanity. Whatever actually happens, including whatever you will actually do and other people like you, can suddenly change. If you'd like to know what it is that you would probably start to do eventually anyway, then you may be committed to adapting early and benefiting most from easily predictable developments like the historic rise of the US and USSR, as well as the ongoing rise of places like Alaska, Arabia, and Alberta. As perceptions of risk shift, opportunity shifts as well. How willing could you be to discontinue investing in rising risk and to reallocate toward rising opportunity? Or even rising stability, more and more stability. Consider more and more safety. Consider that as fuel prices continue to predictably shift, many industries may endure predictable consequences, such as airlines have been enduring predictable consequences since fuel prices worldwide started rising in 1999. Many regions of the planet may also endure predictable consequences, even continuing the ones they've already had been going on. They could be, in some regions, following the recent history of Japan, the USSR, now the former Soviet Union, or the UK, or the recent history, on the other hand, of Alaska, Arabia, and Alberta. Government budgets and politics may also continue to shift predictably. Prices may continue to shift predictably. Now, early on, I mentioned a growing gap between 2 different groups of people. A growing gap may continue to form between those who worship the ideology of randomness or chaos and those who are open to the humility to admit that order may be present without any particular perceiver recognizing a certain order until they actually do. The order is here. The perception or recognition of that order comes when it comes and comes how it comes. But order is always present. There is no such thing as chaos or randomness. There's simply varying degrees of perception of varying forms of order, which can change over time. So those who reject order and instead cling to theories of chaos or randomness, of course, may do so quite predictably. There's an order even to that. Dramatically different consequences continue to be predictable for those investing in the ideology of chaos and those investing in the humility of ongoing learning about order. You could have already invested in the U.S. stock sector, HUI, for a 1,600% cash gain under 10 years. There's a chart of it. You could have already invested in the economies of nations that were making real gains in stock prices. There's a stock chart of about 17 years, 16 years of stock prices rising in Mexico across the whole Mexican stock market index. Now, Mexico did have some shift in currency purchasing power through that time. But how about this one? You could have even just taken an easy gain of 100% in a few months with URPIX, that's a mutual fund, back in the end of 2008. And then you could have even combined that 100% gain in a few months with the second gain of 300% or even more in several more months for a total gain of 700%, let's say, or more. You can see the black line on the chart if you're looking at the chart. Went up to a much higher gain than 300%, but there'd be, in less than a year, a total gain of 700%. That's possible. That's already established as possible through some pretty conventional and widely available investment instruments, a mutual fund, as well as some ETFs or exchange traded funds, which are pretty similar to mutual funds. So again, that 700% gain was in less than 1 year. That's the kind of opportunity that has already been happening. As time goes on, people slowly or quickly come to recognize an order that may have been present for quite a while. Let me know when you'd like to participate in the next similar predictable opportunities, whether it's a 1,600% 10-year rise or a 700% 1 year or less than 1 year rise. All right, thanks for your interest.